are hedge funds predicting a stock market crash. The US economy has seen a modest economic recovery and the stock market has risen behind it. Once again, retail traders are in the driver's seat and raising stock indices. Hedge funds are very hesitant to follow this rally. Let's start. Are stocks rising or falling? The short answer came. The US stock market has shown serious strength since Biden became president. However, we haven't seen much volume in the market for the past few days, and this is something traders are paying a lot of attention to. Stocks rising at a lower volume are a warning sign for a stock market crash. Dow Jones and S&P 500. The Dow Jones Industrial Average has increased by about 9% year to date. S&P 500 stock index increased by 9.08%. Nasdaq Composite index increased by 6.75%. Stock market with it. Dow Jones market breadth gained momentum yesterday. 94% of Dow Jones shares were traded above their 200-day moving averages. S&P 500 stock width also strengthened yesterday. 95% of the shares were traded above their 200-day moving averages. What is the US job market telling us? Traders find it difficult to understand the US labor market because of the conflicting signals here. Monthly job data such as off-farm payrolls show that the job market is much stronger than expected. This month, the US economy created more than 900,000 jobs. This means that economic recovery is on a steady ground and the US economy employs more Americans. However, if we look at the number of unemployment claims per week, it shows that more Americans are starting to apply for unemployment more. We currently have more unemployment demands for 2 consecutive weeks, and this has started to bother traders. Is the stock market crashing? Hedge funds do not spend their chips on recovery stocks. They are more interested in investing their money in defense stocks. Following this strategy, hedge funds underperformed mainly due to retail traders who bought down stocks during the pandemic. Airlines, hotels, energy, and bank stocks have seen a tremendous increase in share prices this year. Of course, the support of fiscal and monetary policies was the driving force behind this. It also appears that these policies are unlikely to go out of town anytime soon, especially now that Joe Biden is pushing for the massive infrastructure package. Why do hedge funds believe in a market collapse? Most hedge funds are concerned that the recovery in the stock market is not real, and we are likely to see the market weakening when incentive support is withdrawn. Hedge funds, like companies, are resilient during the economic slowdown. As such, their exposure to cyclical stocks is the lowest compared to defense stocks in almost a decade, meaning they have more defensive stocks in their portfolio. As a result, in all this pessimism, bear in mind that if hedge funds participate in this rotation rally, we are likely to see the US stock market skyrocket, but their absence leaves the door open for a major correction or stock market crash. If you make any investment or legal decision, it is advised to consult an expert before making this decision.